Welcome back to We Are Cosmic. I hope you guys are doing amazing today. In this video, I want to talk about something very important. My entire thesis around XRP and crypto has changed recently. And when I say changed, I mean completely evolved. The way I used to think about XRP a few years ago is very different from how I see it today. And I think this shift is extremely important for anyone who is serious about understanding where crypto is actually heading. In the early days when I first discovered cryptocurrency, I was just trying to find one real use case, something practical, something that made sense. At that time, crypto felt experimental. It felt risky. In many parts of the world, it even felt borderline illegal. But then I came across Ripple and XRP, and for the first time, I thought, okay, this makes sense. Moving money across borders instantly, replacing slow banking systems, reducing cost, increasing speed, that felt like a real application. Back then, my entire focus was on that one idea. I was obsessed with the concept of XRP being used as a bridge currency. Banks would buy XRP, send it across borders, sell it into local currency, and that demand would increase price. It sounded simple and powerful. I thought this was the killer app. This was the thing that would change everything. But over time, as I learned more, as I studied how financial institutions actually operate, as I understood what businesses really need from this technology, I realized something important. I was thinking too small. Yes, too small. Moving money is important, but moving money is only one small function of the financial system. The financial system does much more than just payments. It handles settlement, it handles accounting, it manages risk, it manages liquidity, it clears trillions of dollars every single day. And when I started looking at it from that bigger perspective, my entire framework changed. It reminded me of something very interesting. When Amazon started, they were selling books online. At that time, people thought the big idea was selling books on the internet. But selling books was not the real innovation. The real innovation was building infrastructure for e-commerce. Books were just proof that the system worked. And I believe something similar happened with XRP. Cross-border payments were proof of concept, but they were never the final destination. The real story is bigger, much bigger. We are not just upgrading how money moves. We are rebuilding the plumbing of the entire financial system. And once I understood that, my investment thesis expanded completely. So when my thinking shifted from just payments to something bigger, I started asking myself a deeper question. If cross-border payments are only one small piece of the puzzle, then what is the real opportunity here? What are financial institutions actually looking for? And this is where things became very interesting. You see, when we as retail investors look at crypto, we think about price, adoption, hype cycles, narratives. But institutions don't think like that. Banks are not sitting in boardrooms asking which token is trending on Twitter. They are asking how to reduce operational cost, how to reduce settlement risk, how to make their systems more efficient, how to survive in a world that is becoming fully digital. The truth is, the global financial system runs on infrastructure that is extremely old. Many banking systems were built decades ago. Different departments use different software. International transfers go through multiple intermediaries. There are clearinghouses, there are reconciliation teams, there are manual processes everywhere. It works, but it's slow, it's expensive, and it's fragile. What I started realizing is that blockchain is not just faster payments, it's programmable settlement. And settlement is the real backbone of finance. Every day, trillions of dollars move between institutions, but many of those transactions are not instantly final. There is counterparty risk, there is clearing time, there is back-end reconciliation, and managing all of that costs enormous amounts of money. Now imagine replacing that with a system where transactions settle with finality, no waiting, no hidden adjustments, no reconciliation battles later, everything recorded transparently on a shared ledger. Even if blockchain only improves efficiency by a small percentage, that small percentage across trillions of dollars is massive, and that's when I understood something I completely missed in the beginning. The real adoption driver isn't hype, it's efficiency. Financial institutions are not looking at XRP and asking, will this pump? They are asking, does this reduce friction in our system? And friction in finance is extremely expensive. Think about liquidity management alone. Banks constantly move capital across jurisdictions to meet obligations. That process today involves multiple layers: time delays, FX costs, operational complexity. If digital assets can reduce that friction even slightly, that's a serious incentive to upgrade. And here's something even more important. The biggest transformation will probably come from the most boring use cases. Not meme coins, not speculative NFTs, not viral tokens, but simple things like treasury management, interbank settlement, tokenized deposits, collateral movement, repo markets. These are not exciting for retail investors, but they are fundamental for banks. When I zoomed out and looked at the bigger picture, I realized that what's happening is not just innovation, it's modernization. The world is becoming real-time. Commerce is global. Markets are 24/7. But traditional banking infrastructure still operates like it's living in a previous era. That gap cannot last forever. Eventually, financial institutions must upgrade. And here's the shift that changed my thesis completely. This is not about replacing the system. It's about upgrading the system. Blockchain is not coming to destroy banks. It's coming to improve how they operate. And once you understand that, you stop looking at XRP as just a payment token. You start seeing it as a potential piece of new financial infrastructure. Now let's get real about something most people don't talk about. Technology alone doesn't win. You can have the fastest network, the cheapest fees, the most scalable system, but if you're not positioned correctly, none of that matters when it comes to real adoption. In the crypto world, everyone loves to chase speed, hype, and metrics like TPS or decentralization percentages. But when you step into the world of banks, that stuff barely matters. Banks ask different questions. They ask, is it compliant? Can it integrate with our current systems? Does it reduce risk? Will regulators approve it? That's it. Everything else is secondary. And this is why so many projects failed to reach institutional adoption. They focused on the flashy metrics and ignored the rules of the real world. They built amazing tech, but forgot that banks cannot just flip a switch and move billions of dollars into untested systems. There's no room for risk. There's no room for uncertainty. Ripple, on the other hand, approached it differently. They didn't try to fight banks or regulators. They built products for banks. They engaged with regulators. They focused on licensing, compliance, and enterprise integration from day one. That might not excite retail traders or create viral social media moments, but it positions them perfectly for the long-term adoption wave. Think about it. Ripple has been involved in discussions with the Federal Reserve and multiple central banks around the world for years. They were not just experimenting. They were laying the groundwork. They were positioning themselves to be the compliant bridge when the rest of the market is still figuring out how to operate safely, and that's the key. The real adoption won't be driven by retail hype or speculative cycles. It will be driven by the trillion-dollar institutions that need a reliable, compliant, and efficient system. This is where the idea of positioning over technology comes in. Most projects focus on features. Ripple focused on placement. They wanted to be in the right spot when the regulatory green light arrives. They wanted to be the bridge that allows banks to transition smoothly into digital rails. Because here's the truth. When tokenization, institutional DeFi, and digital settlement finally take off, the companies that are already compliant, already integrated, already trusted will win. Everyone else will be scrambling to catch up. And this is where my thinking about XRP changed. It's no longer just a payment token or a bridge for cross-border transactions. It's a liquidity layer built into a system that could power the future of institutional finance. Its value is not short-term hype, it's structural, and it grows as more institutions integrate with it. So the takeaway here is simple. The crypto world often chases flashy narratives. Banks chase certainty, stability, and integration. The real winners in this next phase will be the ones that position themselves correctly while everyone else was distracted by noise. Now, here's the part that really changed how I view the whole financial system. I didn't realize it before, but the truth is the traditional financial system is more broken than most people imagine. It works, yes, but it's slow, inefficient, and fragmented. And this is not a small problem. It affects every part of global finance. Most people think that when you send money, it happens instantly. But in reality, the process is full of layers and delays. There are clearinghouses, correspondent banks, reconciliation processes, counterparty risks. Some transactions may take days to truly settle, and all of this costs billions of dollars every year in operational overhead. Now think about today's world. Markets operate 24/7. Businesses are global. Digital commerce never sleeps. But the financial infrastructure, still largely operating like it's the 1980s, that mismatch creates friction, and friction creates cost. And the bigger the institution, the more expensive that cost becomes. This is exactly where blockchain comes in. It's not just about speed or lower fees. It's about finality, certainty, and programmability. When transactions settle on-chain, they're truly done. No reconciliation, no hidden adjustments later, no risk of errors. That certainty is powerful because it affects how banks manage liquidity, risk, and capital efficiency. I also realized that some of the most important applications are not flashy at all. Things like treasury management, interbank settlements, collateral movements, tokenized deposits, and overnight repo markets. These are simple, boring, but massive in scale. If blockchain improves these processes even slightly, the impact is enormous. And here's the key insight I missed early on. This is not optional for banks. They must upgrade. The current rails simply cannot handle the demands of a 24/7 global economy. The old system wasn't designed for this speed or transparency. Financial institutions know it. That's why they're experimenting quietly. They're testing, running pilots, tokenizing small pieces of their infrastructure, hiring experts, all in preparation for the larger shift. The real point is this. XRP and Ripple are not just trying to replace the old system. They're providing the bridge to the new system. They focused on compliance, partnerships, and enterprise-grade integration so that when the shift happens, institutions already have a pathway to migrate. When you look at it this way, XRP is no longer just a token or a payment tool. It's part of the backbone of a potential future financial system, one where assets are tokenized, settlements are instant, and liquidity flows freely across borders and asset classes. Think about it. Banks cannot just deploy billions of dollars into systems that might later be restricted or considered non-compliant. Asset managers can't tokenize securities if the legal framework isn't clear. Regulators need to provide guidance before large-scale adoption can happen. Until that clarity comes, even the most willing institution is cautious. So what have they been doing all this time? Preparing quietly, running pilot programs, testing blockchain infrastructure, tokenizing small internal processes, upgrading custody solutions, building internal teams focused on digital assets. They're doing all the groundwork, but they're waiting for the official signal, the green light. This is similar to the early days of the internet. Businesses saw the potential, but large-scale adoption didn't happen until legal frameworks around e-commerce, online contracts, and digital payments were clarified. Crypto is in that same phase right now. Infrastructure exists, technology works, institutions are interested, but regulatory alignment determines the timing. This is why positioning is everything. Some crypto projects avoided regulators entirely. Some fought them publicly. Some focused only on retail markets. But a few companies, like Ripple, spent years building relationships with policymakers and central banks. Their early meetings with the Federal Reserve weren't random. Their involvement in CBDC pilots across continents wasn't accidental. They were laying the groundwork so that when clarity arrives, they are ready. Because once the green light comes, the institutions that already built compliant infrastructure won't need to scramble. Everyone else will. Compliance can't be added overnight. It has to be built into the architecture from the beginning. Here's the key mindset shift. Financial institutions are not anti-crypto. They are anti-uncertainty. Once the legal and regulatory picture becomes clear, adoption will accelerate dramatically. Banks are already building internal capabilities. Asset managers are exploring blockchain-based settlement. Governments are testing digital currencies. Everyone is waiting for clarity, and once it arrives, it will create a domino effect. First movers will upgrade, others will follow, liquidity networks will expand. What seems like slow progress now will suddenly look like an overnight transformation. This is why I now see XRP's role differently. It's not about pumping short-term value or chasing hype. It's about being a neutral bridge in a tokenized, institutionalized, and fully digital financial ecosystem. It's about liquidity flowing smoothly across borders, asset classes, and currencies, ready to support trillions of dollars moving in a compliant, efficient system. Now let's bring it all together and look at the bigger picture. When I step back and see the full ecosystem, it becomes clear that this is not about replacing banks or creating hype. It's about rebuilding the financial system on better, faster, and more reliable rails. The old system is slow, fragmented, expensive, and risky. The new system, powered by blockchain, is transparent, programmable, always on, and provides instant settlement. And when you combine that with tokenized assets, the implications are enormous. We're not talking about speculative experiments. We're talking about trillions of dollars moving across borders and asset classes instantly and efficiently. This is where the concept of institutional DeFi comes in. Not retail yield farming, not NFTs or meme coins. I mean regulated, compliant, decentralized infrastructure for banks, asset managers, and governments. Imagine a world where bonds settle instantly, real estate can be traded fractionally, repo markets operate overnight, and global liquidity flows 24/7 without friction. This is not sci-fi. It's the natural evolution of finance. And this is why XRP's potential role is so significant. In a tokenized financial system, liquidity becomes the most valuable asset. Institutions will need a neutral bridge to move value between tokenized assets, currencies, and jurisdictions. XRP could be that bridge. Its value is not driven by hype, but by structural necessity within this new financial infrastructure. Here's the critical insight that changed my thesis. The real winners will not be the projects that generate the most retail buzz. They will be the ones that built bridges, integrated with institutions, and prepared for compliance and scale. Ripple has been doing exactly that. They focused on licensing, regulatory alignment, enterprise products, and partnerships. While others chase short-term narratives, Ripple quietly positioned themselves to lead the institutional adoption wave. When regulators provide clarity and tokenization accelerates, the companies that are ready will benefit the most. Most of the crypto world is still figuring out how to approach institutional adoption. Ripple, however, has already laid the groundwork. They are positioned to facilitate the migration of traditional finance into a fully digital tokenized system. This is why my perspective on XRP has shifted so dramatically. I no longer see it as just a payment token or speculative play. I see it as a foundational layer for a new financial system, a system that will be faster, more efficient, and fully programmable. A system where liquidity flows instantly, globally, and securely. The shift is slow at first, but once regulatory clarity arrives, adoption will accelerate. This is not a question of if, it's a question of when. And when it happens, the structural value captured by projects like XRP could be immense. So the updated thesis is clear. We are not chasing memes or hype. We are analyzing direction, infrastructure, and structural adoption. XRP is not just a token. It is a bridge, a liquidity provider, and a potential backbone for the next generation financial system. That's why this isn't just an investment in a cryptocurrency. It's a perspective shift on how finance itself is evolving. And as this transformation unfolds, understanding where and how XRP fits will be key for anyone who wants to see the big picture. Thank you so much for watching this full breakdown. Remember, the future of finance is being built right now, and it's happening faster than most people realize. Stay curious, stay informed, and as always, here on We Are Cosmic, we'll keep analyzing the trends that matter most. I hope you're doing amazing today. Now, before we dive in, I want to share something huge. My entire perspective on XRP and crypto has completely changed recently, and trust me, this video is going to stretch your thinking and maybe even change the way you see the future of finance. In the early days when I first got into crypto, I was obsessed with finding one real use case, something practical, something that made sense. At that time, crypto felt experimental, risky, almost borderline illegal in some parts of the world. Then I came across Ripple and XRP, and for the first time I thought, okay, this makes sense. Instant cross-border payments, lower costs, faster settlements. That felt like a real application. Back then, I was hyper-focused on XRP as a bridge currency. Banks would buy XRP, send it across borders, sell it into local currencies, and that demand would drive price. Simple, right? Powerful, right? I thought this was the killer app, but over time, I realized I was thinking too small. Banks are not chasing hype or retail trends. They care about efficiency, cost reduction, and risk management. Even small improvements in operations scale massively across trillions of dollars. That's why blockchain isn't just faster payments. It's programmable settlement, transparency, and certainty. And here's the kicker. The most impactful applications aren't flashy. Things like treasury management, interbank settlements, tokenized deposits, or overnight repo markets. Simple, boring, but absolutely essential. That's where the real transformation begins. Here's something most people miss. Technology alone doesn't win. You can have the fastest network, the cheapest fees, the most scalable system, but if you're not positioned correctly, it doesn't matter. Most crypto projects chase hype and flashy metrics. Banks, they ask different questions. Is it compliant? Can it integrate with our systems? Will regulators approve it? This is where Ripple stood out. They didn't try to fight banks or regulators. They built for banks. Licensing, compliance, enterprise integration. Quietly, patiently, strategically. While others chased short-term gains, Ripple positioned themselves perfectly for the institutional adoption wave. And that's when my perspective on XRP changed. It's no longer just a payment token. It's part of a broader financial infrastructure, a potential liquidity layer in the next generation banking system. The truth? Traditional finance is broken. It works, but it's slow, expensive, and fragmented. Transactions involve clearinghouses, multiple banks, reconciliation teams, sometimes taking days to settle. Operational costs are enormous. Markets are 24/7. Businesses operate globally, but banking systems still function like it's the 1980s. That friction creates cost, and the bigger the institution, the more expensive it becomes. Blockchain changes everything. Transactions settle instantly, transparently, and with finality. Even a small efficiency improvement across trillions of dollars is massive. That's why financial institutions must upgrade. It's not optional, it's inevitable. What have they been doing? Preparing quietly, running pilots, testing blockchain infrastructure, hiring teams, upgrading custody, building expertise, waiting. And when clarity comes, the first movers, those who built compliant, integrated infrastructure, will move fast. This is exactly why XRP's role is so interesting. It's positioned to be a neutral bridge when institutions finally act. Not hype-driven, not speculative, but structural in a tokenized institutional financial ecosystem. Institutional DeFi is coming. Regulated, compliant, massive scale. Bonds settling instantly, fractional real estate, overnight repo markets, global liquidity. This is the future. XRP's potential? Huge. A neutral bridge providing liquidity across currencies and assets. Its value is structural, not hype, not speculation, infrastructure, integration, transformation. The shift is slow now, but when regulatory clarity hits, adoption accelerates, trillions of dollars move, institutional systems modernize, and XRP could play a central role in that transformation. So the takeaway, don't just look at price or short-term hype, look at positioning, infrastructure, and structural adoption. That's the updated thesis. That's how I see XRP's role in the future financial system. Thanks for watching. Stay curious, stay informed, and here on We Are Cosmic, we'll keep analyzing the trends that matter most.